Good morning, everyone. This is Brad Matheny again. Let all the bells go off. This is one of my automated trading systems going. The markets are just opening, and what I wanted to do this time was to try to show you how I use my custom algos along with the recent trend channel and Fibonacci price theory and others to try to identify opportunities every day and every week for trading. So we're gonna first look at here the TT scanner. I didn't realize that in the first video I had it set up to only show a window, not the full screen. This is part of the algos that I run that are available on my website. But the whole point behind this is I look for different types of triggers. Over here, we have the TT scanner triggers. These are longer term, daily on the left, weekly on the right triggers. So you can see here, top of the list, they're all sorted by bull bear rank score over here. And then we have the bull bear shift. And then we have trending long. This is a long trigger, whether we're long or short. Then we have trending here, which tells us which direction price is moving. Then we have entry price, in trade profits, target 1, target 2, which will be highlighted in purple if they've been reached, and then a stop. Then we have a proprietary thrust indicator and profit factor and win rate. Now, understand, ladies and gentlemen, this is basically 3 separate systems running, giving me opportunity to find trades. So Google is in a new long trade. We have a new long trade here in Intel. These are the 33 thrust patterns. These are short to intermediate term thrust patterns when they're highlighted. So we'll look at these. And then these are what are called the pop shift patterns. Pop shift patterns when they're highlighted in red here. Here's a green one over here, which is bullish. These are really, 1, 2, 3 day triggers. So let's take a look at Intel real quick. So let's take a look over here, INTC. Now remember, that was from Friday, this image that I showed you. So this was from the 29th, 9/9, which was last week. We had a Intel, we had a new bullish trigger here at 38.12, and then we had a 33 thrust and a pop shift pattern here. And again, these come to subscribers on my website, so they help you find good trades. So what we're going to do is we're going to come in here, we're going to take a look at the same setup I showed you guys earlier. Okay, trend channel, lower trend channel, up off of these rejection points, right about there, and blue, clone, pick an upward channel. So we have these intermediate rejection points here. You can see rejection here, then we got above it with a bit of exuberance, came back down, rejection, 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 bit of exuberance, came back down, retested the channel, came back up. So then we have this exuberance channel up here, which I will mark as fairly strong resistance. Oops. And on the 9th, which was September 8th here, so I did that on Saturday. So we'll put a vertical line right here indicating where the triggers were being generated. And you can see that we have already missed the bottom. This is where I would be highlighting to tell you that this is our base, this is our bottom, this is probably where we should be looking to try to get into the trade. But if we take back a look over here, the weekly trigger is showing us a 33 thrust pattern. That's what this is, indicating that we possibly have 2 to 4 weeks of upward trending. And this is a pop shift pattern telling us that we've got maybe 3 to 7 to 10 days of upward trending. And then we have a new daily trigger here with a target at 40.21 and 42.25. So let's highlight those areas. No, we have a, oops. We have 40.21 roughly right in this area. And 42, what was the other one? 42.25. And that window screen stays up there, 42.25. So down in this area, roughly there. So there's our targets on a daily basis. How are we looking from a standpoint of where we were at when the trigger was generated, where the market opened? Now, obviously, we have quite a bit of downside risk here. So this has got to be something that we've got to adjust differently from a standpoint of we cannot just run our stops back at this level. We have to pick stops up in this level that's going to protect our trade, make sure that we have a proper ratio of risk to reward. Now, from our target to the upside, we only have a 5 to 10% upside target. That would be exuberance. And we need to make sure that our risk level is functional. So now you can see that we have these rejection points here, which turn into a double topping formation. So these double topping formations can be very, very important. The reason being, ladies and gentlemen, is that they show very strong support and resistance. We've just gotten above it. This would be a good area for our stop. So our stop should probably be up in this area, which moves our stop down to roughly 3%. Okay. And that's a pretty good area for us to be able to have a stop and understand that this becomes kind of a price void. So we come in here, this becomes a void. We do not want to trade this area. This is kind of a negligible price void where we would wait to see what happens. Okay. So here we are. We're looking pretty good. We've had a nice trigger right here, confirming short to intermediate term, long term upward trending on my algos. Okay. We are missing this trigger here, which is fine. I mean, we don't catch them all at the bottom. This would have been a better entry, obviously, off this rejection and move upward. But given the trigger that's been generated and we're trying to evaluate it, we have a 3% stop and a 10% target, roughly 5 to 10% target. That's okay. It's a 1.5 to 2.5 roughly profit target to risk level. And we have good solid trending, which means when this trigger took place, we've already seen the market move upward. Typically, when these triggers happen, what you would be looking for is to try to make sure that the following bar, so the trigger occurred theoretically on Friday, you'd want to make sure that the Monday's trading either opens higher as a confirmation, meaning you're seeing follow through in the trend, or closes higher to get you in on this next bar. And you would want to avoid a lower bar. If the following bar opened down in this area or trended downward, you would then want to just wait the trade out. It's a trigger. It's potentially a valid trigger, but you would want to wait out whatever consolidation is occurring and maybe move on to the next symbol, because on Mondays, hypothetically, when the trigger is generated, you want to see follow through the next bar. So let's take a look at another one. So we'll come in here and NOW has got a weekly trigger. NOW is flat over here. So we'll take a look at NOW. This is, again, a longer term weekly trigger. The trigger occurred on the 9th. So get rid of this. Try to get a vertical bar. And there's our trigger date. And we come in here. Sorry about this window, guys. It keeps showing up no matter what I do. Okay, so now we're going to come down here. We're going to take a look at the trend. Okay, pretty solid uptrend. NOW is service now. It's trading at $500. So, it's a high price stock. It's going to have, because it's trading up in this area, it's going to have some pretty good volatility, 20, 30, $40 probably per trend. And we're going to look at the channeling. Again, we get very clear rejection. Can you see it right here? Broke below it, rallied, broke below it, rallied. Very clear rejection. Learning to identify this rejection is going to be important for you to try to understand where we are in this trend and where price actually rejects in areas. So here we have the same thing. Moderate rejection, strong rejection, strong rejection, strong rejection. So there's our window. There's our channel. We have come off of this area here, which is our most recent support area, right in this area. We are up in this upper trend. We do have this, we don't know at this point, but let's ignore these next two bars. We do have a gapping area here that we might want to pay attention to. And I will do that with a horizontal line. This is a three-river evening star formation in Japanese candlesticks. Typically, the high of that bar, meaning the high of these two bars, this is a gapping, what's called a star formation. But the high level here acts as kind of a resistance area, and it just so happens to coincide with where we're at now. So we're getting some rejection over here. We're in this upward trend. As of this time, we were pretty toppy, still an upward trend with RSI. We had pretty strong volume the day before here, moderate volume on the trigger bar. But now let's take a look at where we would, potentially be with this trade. So hypothetically, we would be from a trigger bar, we would have a downside risk of about 5%. We would have an upside target of maybe 10%. So that's a 2-to-1 ratio. And again, this stop down here, potential support level is too low. We can't have a 20% risk with a 10% target. So we would want to look for something that provides additional support. So now look through this chart and let's try to find something that provides additional support. And what I'm going to do is I'm going to look for price reversal patterns in this area. I'm going to look for reversal patterns again in this area. And then I'm going to look for anything on the opposite side, downside, that looks like we get some sort of reversal. So this actually, or this confirms. And what I'm going to do is I'm going to clone this, move this down to about this middle channel area, set this up as kind of a light purple. And now this is basically rejection. So bullish rejection, boom, rejection, boom, rejection, boom, cleared to the downside at this point, moving downward, retested support, rejection, rejection. Now, where are we? Okay, so in theory, ladies and gentlemen, before I run out of time, we're not going to be expecting this now to begin to move much higher until it gets above this channel level here. This is really our make or break area for the exuberance type of rally that we could see up in this area. Still a valid long, still a valid trigger. In order to eliminate risk, I would probably look at this low here, try to confirm against any other low or high area, which occurs kind of in this area with this rejection and this rejection. So in theory, if I take a look at this rejection, which was a definite trend reversal, come straight across here, make sure that I don't carry the extended line. And again, I'm looking at these rejection areas. They're very important, these rejection areas, because they tell you where price is struggling. And this gives me the idea now that I can move my stop up, set it up to about this rejection area. 3.78 now is my stop with an upside target potentially at, well, really somewhere between 6.5 and 11%. Okay, this gives you a very solid way to identify risk, identify trend, and now we're moving sideways here. Now is down 8% right now, but we're doing okay. So let's take a look at QLD just for the heck of it. Hopefully I don't have too much on this chart. So this is the daily QLD chart. I've only got about 6 minutes left on these videos. Last video I ran out of time, which kind of sucks, but whatever. Okay, so now we come off the lows. We get very clear rejection here. Try to tie this with anything else. Kind of comes up to this area and comes up to these areas here. Perfect. Look at that, guys. You see how I'm looking for the rejection areas? You pick a low, you find a rejection area, then you try to find secondary and third confirmation. Then eventually, if you're lucky, you'll get fourth, fifth, maybe sixth confirmation. So there's our channel. We're in an uptrend. We clone this, come up here, try to find our rejection area. I'm looking at this area right now, looking at this area, thinking that we have an inner channel and that we might have an outer channel. So we have rejection, rejection. So we need to look really, let's come back up here. So there's our inner, outer, and middle channel. Sorry, lower, higher, and middle channel. And I could probably move this down just a bit. Okay, so we're in an uptrend, obviously. We've come off of these lows back on August 17th. We're moving upward. We do have, and this is very important, we do have a secondary downward channel coming across here, which I want you to be very aware of because we're in a contracting phase now, which you have to now understand where we're at in the contraction phase. And you need to understand that there is no opportunity for buying the QLD, in my opinion, until we clear this upper, and I'm going to make it heavier, until we clear this channel. There is no opportunity for buying until we clear this channel. Yes, you could have bought off of this low. So in theory, you could have said, okay, look, deep rejection, historical lows. You could have got in here maybe for 2 or 3 or 5 days or a nice options trade. But up in this area, we are flagging. You can see very clearly kind of a flag formation across here. And that flag, which apexes right over here off of this channel, is going to create some volatility. So what's going to happen over here, just so you know, is QLD is going to reach an apex in 2 or 3 or 4 days, and then it's going to become potentially volatile. Who knows where it'll go? Okay. In theory, because it's an uptrend, we should count A, B, C. We'll actually come down here. Base A, B, C, D, E, likely to the upside. So I'll get rid of this. And this is basic flag formation, pennant formation theory. So likely to the upside, which may see some sort of a drop. That's called a washout low before it actually breaks to the upside. But you do not want to be trading this yet. You want to try to wait for the breakout or breakdown structure, which is going to be basically across these highs here and across potentially these lows here. We need to get out of this range. Until we get out of this range, we are trapped in a flag pennant formation, and we do not want to really trade. So you could buy a breakout to the upside, or you could buy a dip below this. But in theory, a dip down into this area would be below this channel. It would indicate that we are moving downward. In theory, because we have this upward price channel with a downward price channel, the best trade you could make right now off of these setups is a short trade where you use this level here as resistance. You try to target a downside move from here, possibly to here, 6%, or from here to here, maybe 13%, with a stop right here. And before I run out of time, a stop right here at 2.9%. That's your smart play. So again, your stop is here, your range, your target, your stop is right up here. Your downside move is more highly likely at this point. Now remember, it would have to break below this level right here, this blue line, but this is your smart play, low risk trade right now. It's a breakdown. Now, historically, September is a pretty rough month. If you know anything about September, it's a pretty rough month. So I'm trying to show you here how an intermediate trend can take over from an uptrend and can act to help to act as guidance. Again, I'm going to keep doing these. People seem to like them. I hope you enjoy, and I hope you understand what I'm trying to teach you. It's not hard. once you actually see what I see on these charts. Okay, guys, that's it. Talk to you soon.